Part 1. Introduction. Welcome back to Debt-Free Dreams, where we break down complex financial concepts to help you reach your goals of financial freedom. Today, we're diving into one of the safest and smartest strategies for investing in cryptocurrency: dollar cost averaging, or DCA. If you've ever felt nervous about the volatility of crypto, DCA is a beginner-friendly way to reduce risk, build your portfolio over time, and avoid trying to time the market. By the end of this video, you'll learn 1. What DCA is and why it works so well for crypto. 2. Step-by-step instructions to set up your own DCA plan. 3. The best tools to automate your strategy safely. 4. Pro tips to maximize your gains and avoid common mistakes. If you're excited to invest in crypto without losing sleep over market fluctuations, keep watching. Check the description below for links to the best tools, and don't forget to subscribe for more crypto and financial tips. Part 2. What is dollar cost averaging? Dollar cost averaging, or DCA, is an investment strategy where you invest a fixed amount of money into an asset, like Bitcoin or Ethereum, on a regular schedule, regardless of the price. Why it works: smooths out volatility. Instead of investing all your money at once, you spread it out, buying both highs and lows to average out your purchase price over time. Reduces emotional decisions. By automating your investments, you remove the stress and temptation of trying to predict market movements. Example: let's say you have $1,200 to invest in crypto. Instead of putting it all in today, you split it into $100 per month over the next 12 months. If prices rise, you'll own less crypto, but if they dip, you'll own more, resulting in an average purchase price over time. Part 3. 3. Benefits of DCA. 1. Minimizes risk. With DCA, you're not gambling on a single price point. You're reducing your risk by spreading your investments over time. 2. Encourages consistency. DCA helps you stick to a regular investment habit, which is crucial for long-term success. 3. Works well for volatile assets. Crypto markets are known for extreme price swings, and DCA helps you stay calm during these ups and downs. Part 4. How to set up a dollar cost averaging plan. Step 1. Decide how much you can invest. Start by setting a budget that you're comfortable with. Only invest money you can afford to lose. Example: $50, $100, or $500 per week or month. It's entirely up to you. Step 2. Choose your crypto assets. Focus on established cryptocurrencies like Bitcoin, BTC, and Ethereum. For beginners, these are considered safer options compared to smaller, riskier altcoins. Step 3. Select a schedule. Consistency is key. Pick a recurring schedule that works for you. Weekly, bi-weekly, monthly. Step 4. Automate your investments. Use platforms that make DCA easy and secure. Here are a few tools I recommend. 3. A powerful trading automation tool that allows you to set up recurring crypto buys effortlessly. Bybit, a centralized exchange that supports automated DCA investments. CoinStats, a portfolio tracker to monitor your DCA progress. BlockFi, earn interest on your crypto as you dollar cost average into it. Step 5. Track your results. Use tools like TradingView to analyze the price movements of your assets and evaluate the effectiveness of your DCA strategy. Part 5. Pro tips for maximizing your DCA strategy. Tip 1. Stay disciplined. The beauty of DCA is that it removes emotions from investing. Stick to your plan, even if prices spike or crash. It's all part of the process. Tip 2. Diversify your portfolio. Don't put all your money into one asset. Consider splitting your DCA strategy across multiple cryptocurrencies or reduce risk. Tip 3. Use a hardware wallet for security. After purchasing your crypto, transfer it to a secure wallet like Ellipal or Safepool to keep your assets safe from potential exchange hacks. Tip 4. Reassess regularly. Set a reminder to review your DCA strategy every 6 to 12 months. Are you happy with your progress? Do you need to adjust your budget or assets? Part 6. 3 common mistakes to avoid. Mistake 1. Investing too much too soon. Don't overcommit. Start small and increase your contributions as you grow more confident. Mistake 2. Skipping your schedule. Skipping a month or two can disrupt your average purchase price. Stay consistent. Mistake 3. Ignoring fees. Choose platforms with low transaction fees to avoid eating into your returns. Dollar cost averaging is one of the best ways for beginners to start investing in crypto safely. It's simple, effective, and doesn't require you to time the market. If you're ready to take control of your crypto investments, start implementing DCA today. Use the tools and strategies we discussed and watch your portfolio grow over time. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell. Check the description below for links to the best tools for DCA and other helpful resources. Let me know in the comments what's your favorite crypto to DCA into. Thanks for watching.